Crisil has just upgraded India's GDP forecast for financial year 26 to 7%. And here is the interesting part. India is now expected to remain the fastest growing major economy in the world, ahead of China, US, and Europe. But why did Crisil raise the focus? What is driving India's next phase of growth? And is this 7% number actually realistic? Let's break down the full story clearly, simply, and with zero noise. So, what exactly did Crisil say? Crisil expects the Indian economy to grow at 7% in financial year 26, up from its earlier prediction of around 6.5%. This upgrade comes from strong signals in manufacturing, public capex, private sector demand, formal job growth, service sector expansion. But the most surprising driver is that India is actually growing faster despite a weak global environment. So, reason number one, manufacturing is finally rising. India's manufacturing is quietly having its strongest phase in years. PLI schemes are working, electronics production is booming, EV components are scaling, pharma and chemicals are expanding, defense manufacturing is breaking records, steel, cement, heavy engineering are stabilizing. So, export led economies are slowing. But India is growing because of domestic manufacturing powered by reform. For almost a decade, private investment was slow, not anymore. Crisil notes that private sector capex picking up due to corporate deleveraging, higher capacity utilization, strong balance sheets, incentives for manufacturing, and rising demands in Tier 2 and Tier 3 cities. So India's investment engine is restarting. Now, let's talk about the biggest game changer. So, government capital expenditure, especially on highways, railways, ports, airports, metro networks, green energy, has increased 3x in the last few years. Crisil says this capex is creating a multiplier effect, pulling private sector investment with it. Even during global slowdown, Indian consumption is not collapsing. Why? Because there's an expanding middle class, there's a rising disposable income, there's increase in financial inclusion, rural recovery signals, housing boom in tier 2 cities, credit growth in retail lending, and digital economy scaling like never before. So India's growth is coming from its own people, not global cycle. Service is still remaining as the India's main backbone. IT, global capability centers, tourism, banking, digital payments, e-commerce, logistics, healthcare. Crisil says services will contribute almost half of the financial year 26. So let's talk about the risk also. Crisil also warns about the challenges. That is global slowdown, energy price swings, uneven monsoon, slow export markets, fiscal discipline in election year. These risks can slow momentum but not derail it. So, is the 7% number realistic? Crisil says yes, because India now has strong macro fundamentals, high forex reserves, controlled inflation, stable banking system, global companies shifting to India. This is not temporary recovery. This is structural growth. So, India is entering a decade where 7% may not be the peak. It may become the baseline. If you want to understand India's economic trajectory with absolute clarity, subscribe. I will simplify the biggest finance and economic updates every single day. Thank you.